What's the most important step to becoming rich? Everybody is looking for the secret to financial freedom. Today, let's dive deep into the world of investing and uncover the secrets to financial success, all inspired by none other than the legendary Warren Buffett. This guy's a big deal, like really big. With a net worth of over $136 billion at 93 years old, he's practically a walking, talking financial fortress. But Buffett isn't just about stacking cash. He's all about that long-term game, making smart moves, and building a life of true wealth. And that's what we're breaking down today: how to adopt Buffett's mindset and strategies to achieve your own financial goals. We're talking about actionable steps you can take right now to start building your own financial empire. Whether you're just starting out or looking to level up your investment game, these principles are your roadmap to financial freedom. So buckle up, hit that like button, and let's unlock the secrets to financial prosperity, Warren Buffett style. All right, let's kick things off with Buffett's first principle: prioritize your savings. You've probably heard the saying, pay yourself first. And let me tell you, it's not just some catchy phrase, it's the cornerstone of building wealth. Think of it this way: every time you get paid, before you even think about bills, rent, or that new pair of shoes you've been eyeing, set aside a portion of your income for savings. Buffett recommends aiming for at least 10%, but hey, if you can swing more, go for it. This consistent act of putting money aside, no matter how small the amount, adds up over time. It's like that gym membership you never use, except this time it actually pays off. By prioritizing your savings, you're essentially telling your money where to go instead of wondering where it went. And the best part? You don't need to be a Wall Street wizard to make this work. Start small, stay consistent, and watch your savings grow. Trust me, your future self will thank you. Stay tuned until the end for the answer to your question. Now, you might be thinking 10%? That's not much, Graham. But here's where the magic of compounding comes in. Compounding is like this snowball effect where your money makes more money, and then that money makes even more money. It's basically free money, people. Let's say you invest $100 today with a 10% annual return. After 1 year, you'll have $110. Not bad, right? But here's where it gets interesting. In year 2, you're not just earning 10% on your initial $100, you're earning 10% on $110, and so on. Over time, this snowball effect really starts to gain momentum, turning those small, consistent savings into a substantial nest egg. The earlier you start, the more time your money has to compound and grow exponentially. So don't underestimate the power of starting small and letting compounding work its magic. Remember, Rome wasn't built in a day, and neither is a solid financial foundation. Be patient, stay consistent, and watch your wealth soar. All right, let's talk about debt, the arch nemesis of financial freedom. Debt is like that annoying friend who keeps borrowing money and never pays you back. It weighs you down, stresses you out, and prevents you from reaching your full financial potential. Think of it like this: every dollar you owe in interest payments is money that could be working for you, growing your wealth instead of lining someone else's pockets. High-interest debts, like credit cards, are the worst offenders. That's why Buffett stresses the importance of eliminating debt as a crucial step towards financial prosperity. By tackling your debts head-on, you're essentially giving yourself a raise. That money that was going towards interest payments, it's yours to keep now. And the best way to tackle debt? Prioritize those high-interest debts first. Make a plan, create a budget, and chip away at those balances strategically. Remember, every little bit counts. Now, I know what you're thinking. Easier said than done, Graham. How do I actually get rid of this debt monster? Don't worry, I've got your back. There are a few strategies you can use to slay that debt and reclaim your financial freedom. One popular method is the snowball method. This involves listing your debts from smallest to largest, regardless of interest rates. Focus on paying off the smallest debt first while making minimum payments on the others. Once that smallest debt is gone, roll that payment amount into the next smallest debt, and so on. This method is great for building momentum and staying motivated because you're seeing quick wins early on. Another option is the avalanche method, where you prioritize debts with the highest interest rates first. This approach saves you the most money on interest payments over time. Ultimately, the best method is the one that works best for you and your financial situation. The key is to create a plan, stick to it, and celebrate those milestones along the way. All right, let's talk about getting a grip on your spending. This isn't about being cheap, it's about being smart and making sure your money is working for you, not against you. The first step is to understand the difference between your needs and your wants. Needs are the essentials, the non-negotiables, things like rent or mortgage payments, groceries to keep you fueled up, basic utilities to keep the lights on, and transportation to get you to work. These are the foundational expenses you absolutely need to cover. Now, wants are where things get interesting. These are the things that make life more enjoyable, but you can technically live without them. Think that daily latte, the latest video game, or those designer shoes you've had your eye on. Remember, there's nothing wrong with enjoying your money and treating yourself occasionally. The key here is to be mindful and find a balance. Do you really need that $5 coffee every day? Or could you brew your own at home and save a few $100 a year? It all adds up. I don't think people understand how powerful a budget can be. Now, how do we actually gain control? We create a budget. Don't worry, it's not as scary as it sounds. Think of it as a financial roadmap that helps you track your income and expenses so you can see exactly where your money is going. There are tons of budgeting apps out there that can help you do this effortlessly. You can literally connect your bank accounts and they'll categorize your transactions for you. It's like having a personal finance assistant in your pocket. Once you have a clear picture of your spending habits, you can start setting realistic limits for each category. Maybe you allocate a certain amount for groceries, entertainment, transportation, and so on. The goal here is to be conscious of your spending and make informed decisions. Remember, a budget isn't about restricting yourself. It's about empowering yourself to make the most of your hard-earned money and achieve your financial goals faster. By controlling your expenses, you free up more cash flow to invest, save, and build the future you deserve. Let's make it happen. All right, let's talk about one of the most important investments you can ever make, investing in your financial education. You see, in the world of money, knowledge truly is power. Think about it. You wouldn't buy a house without understanding the mortgage process, right? You wouldn't start a business without learning the basics of entrepreneurship. So why treat your personal finances any differently? By investing in your financial literacy, you're essentially giving yourself the tools and knowledge to navigate the complex world of money with confidence. You'll learn how to make informed decisions about budgeting, investing, saving, and so much more. The best part? You don't need to go back to school to become financially savvy. There are countless resources available right at your fingertips, from books and podcasts to online courses and seminars. What are some of your favorite resources for financial education? Let us know in the comments below. Where do you begin your financial education journey? Don't worry, I've got you covered. Start with books like Rich Dad, Poor Dad by Robert Kiyosaki, The Intelligent Investor by Benjamin Graham, and The Psychology of Money by Morgan Housel. Podcasts like Planet Money, The Dave Ramsey Show, and online courses on Coursera and Khan Academy are great too. Keep learning to make smart financial decisions. Let's talk about building wealth like a pro by diversifying your income streams. You see, relying on a single source of income, like your 9-to-5 job, is like putting all your eggs in one basket. If something happens, like an unexpected layoff or a downturn in your industry, your financial security could be at risk. That's where multiple income streams come in. By creating multiple streams of income, you're essentially building a safety net for yourself and reducing your financial risk. If one stream dries up, you'll have others to fall back on. Plus, having multiple income sources can accelerate your path to financial freedom. It's like having multiple engines propelling your wealth-building journey. Now, you might be thinking, Graham, I have a 9-to-5 job. How am I supposed to create multiple income streams? There are more opportunities than ever to generate income outside of a traditional job. One popular option is real estate. You could start by renting out a spare room on Airbnb or investing in REITs, which are like mutual funds for real estate. Another avenue is the stock market. Investing in stocks, bonds, or ETFs can generate passive income. If you've got an entrepreneurial spirit, consider starting a side hustle. Diversifying your income sources is all about creating financial stability and opening up new opportunities for growth. All right, so you've been working hard, saving diligently, and you're finally ready to start seeing your money grow, right? This is where discipline comes in. Investing is a marathon, not a sprint. You won't get rich overnight by chasing the next hot stock tip. Trust me, I've seen people get burned that way. Think of it like building a house. You need a solid foundation, strong materials, and a plan to withstand the test of time. You wouldn't just throw something together and hope for the best. The same goes for your investments. Don't get swayed by every little market fluctuation or news headline. Remember, the media often sensationalizes things to get clicks. Stick to your investment strategy, do your research, and focus on the long-term potential. Remember, even Warren Buffett, one of the most successful investors of all time, emphasizes the importance of patience and discipline. He's known for holding on to investments for years, even decades, to reap the rewards of compound growth. One of the biggest mistakes I see people make is letting their emotions dictate their investment decisions. They get scared when the market dips and sell at a loss, or they get greedy when things are going well and end up buying at inflated prices. Remember, the stock market is driven by fear and greed. When you let those emotions control your decisions, you're playing right into the hands of the market manipulators. Instead, take a step back, breathe, and remember your long-term goals. Think of it like this. Would you sell your house just because your neighbor told you the housing market might dip slightly? Probably not. You'd consider the bigger picture, the long-term value of your investment. Investing should be boring. Find solid companies with strong fundamentals, invest consistently, and let time work its magic. Don't get caught up in the hype or let short-term noise derail your financial future. You've built your wealth, you're living comfortably. Now what? Warren Buffett's philosophy shines here. He's a firm believer in giving back. Use your wealth to make a difference. Impact lives with your success. Giving back benefits you too. Leave a legacy beyond material possessions. It's about making a positive impact. Now, you might be thinking, Graham, that's easy for Warren Buffett to say. He's a billionaire. And you're right, he's incredibly generous, having pledged 99% of his wealth to philanthropy. But here's the thing, he started small, just like all of us. Buffett's journey is a testament that you don't need to be a billionaire to make a difference. He started with small donations, gradually increasing his giving as his wealth grew. He's always emphasized that it's not about the amount, but the intention and impact behind it. Remember, even donating a small percentage of your income can make a significant difference in someone's life. Start with causes you're passionate about, whether it's education, poverty alleviation, or environmental conservation. Every little bit helps. So, as you progress on your financial journey, remember the importance of incorporating philanthropy into your plan. Start small, stay consistent, and watch as your contributions create a ripple effect of positive change. It's one of the most rewarding investments you can ever make. It's easy to get caught up in the pursuit of wealth, constantly chasing that next zero. But true richness goes beyond net worth. It's about developing wisdom, character, and living aligned with your values. Warren Buffett lives simply, known for frugality and lifelong learning. True wealth lies in personal growth, strong relationships, and positive impact. Find balance where financial success complements a life of purpose. Invest in yourself, nurture relationships, and strive to be better. Now, developing your wisdom isn't about becoming a monk and renouncing all material possessions. It's about finding joy in the simple things, appreciating what you have, and constantly seeking knowledge and growth. Warren Buffett, for instance, is an avid reader, a bridge enthusiast, and a devoted family man. He understands that true happiness comes from pursuing your passions, spending time with loved ones, and continuously expanding your horizons. It's about living a life that's congruent with your values. If you value family, make time for them. If you're passionate about learning, make it a priority. True wealth is about having the freedom and the means to design a life that brings you joy and fulfillment. So, as you're on your path to financial prosperity, remember that it's just one piece of the puzzle. Focus on building a life filled with purpose, meaning, and genuine connections. That's the legacy you leave behind, the true measure of a life well lived. And there you have it. 8 powerful steps inspired by Warren Buffett himself to guide you on your journey to financial prosperity. Remember, it's not just about accumulating wealth, it's about building a life of meaning, purpose, and impact. By prioritizing savings, eliminating debt, controlling expenses, investing wisely, diversifying income, staying disciplined, sharing your success, and developing your wisdom, you're not just securing your financial future, you're shaping a brighter future for yourself and those around you. Thank you for joining me on this journey. Don't forget to like, comment, and subscribe for more insights into achieving financial prosperity the Buffett way. See you soon. And remember, start with these 3 steps. 1. Prioritize your savings. 2. Eliminate your debts. 3. Invest in your education.